Top tax saving strategies to prepare for 2025. As we approach 2025, it's more important than ever to have a solid tax strategy in place. Being proactive now will help you protect your money and optimize your savings because tax laws may change in the future. Making the correct decisions today can have a big impact on your financial destiny later on, whether you're a retirement planner, a working professional, or an experienced investor. Understanding the system and taking advantage of every chance to preserve more of your hard-earned money are key components of smart tax planning, which goes beyond simply correctly completing forms. By maximizing your retirement contributions, utilizing health savings accounts, HSAs, and investigating tax-efficient investing alternatives, you can reduce your taxable income and improve your financial development. We'll go over 7 important tax-saving techniques in this extensive article to help you get ready for any changes to the tax code that might occur in 2025. By putting these strategies into practice, you may successfully lower your tax obligation, benefit from strong incentives, and set yourself up for a safe and successful year. These tactics will provide you the skills and information you need to handle the intricacies of the changing tax environment. Whether your goal is to increase your wealth, prepare your estate, or just make better financial decisions, are you prepared to manage your taxes? In order to maximize your tax planning for 2025 and beyond, let's get started. 1. Make the most of your retirement contributions. One of the best ways to save taxes and improve your long-term financial situation is to maximize your retirement contributions. You can drastically lower your taxable income by making contributions to tax-advantaged accounts, such as an IRA or 401k. Contributions to a traditional 401k are made before taxes, which immediately reduces your taxable income for the year. This can result in significant savings, particularly for people in higher tax rates. A matching contribution is another benefit that many employers provide, which essentially doubles your investment. It is important to make a minimum payment in order to fully benefit from this free money. To optimize development potential throughout the year, try to raise your contributions as early as feasible for 2025. You might want to think about diversifying with a Roth IRA if you expect future tax increases. Although after-tax money is used to fund Roth accounts, your assets grow tax-free, and you can take qualifying withdrawals from them at any time in retirement without incurring taxes. 2. Health savings accounts. HSAs should be utilized. One of the most useful and tax-efficient tools available are a health savings account, HSA, especially for people with high deductible health plans. The 3 tax benefits that HSAs provide are tax deductions for contributions, tax-free growth on investments, and tax-free withdrawals for approved medical costs. This special combination is a crucial tactic for 2025 tax planning since it can significantly lower your taxable income. Early in the year, try to donate the greatest amount permitted in order to get the full benefits. This strategy offers your investments more time to grow while simultaneously optimizing your tax deduction. Because the money in an HSA rolls over from year to year, unlike flexible spending accounts FSAS, you can accumulate a sizable tax-free nest egg for future medical expenses. 3. Utilize tax loss harvesting to your advantage. Tax loss harvesting is a calculated strategy that lowers taxable income by enabling investors to sell failing investments to offset gains in other parts of their portfolio. You may be able to reduce your overall tax liability by offsetting capital gains from lucrative assets by realizing these losses. If you expect market turbulence in 2025, this approach may be especially helpful. Examine your portfolio prior to year-end to find any underperforming assets that might be sold at a loss in order to successfully apply tax loss harvesting. Both short-term and long-term capital gains, which are normally subject to higher tax rates, might be offset by the realized losses. You can also use up to $3,000 of your losses to offset other income. 4. Make good use of charitable contributions. Giving to charities is a great way to lower your taxable income and help causes that are important to you. Instead of giving cash for 2025, think about giving valued assets like equities, bonds, or real estate. You can further reduce your taxable income by giving these assets directly, which will spare you from paying capital gains taxes on the appreciation. Another tactic is to use a donor-advised fund (DAF), which gives you the freedom to choose which charities to support later while enabling you to make a charitable gift and earn an instant tax benefit. This helps reduce your tax obligation and guarantees that your donations support the causes that are most important to you, which is especially advantageous if you're expecting a higher income year. 5. Examine investment strategies that are tax efficient. You can lower your overall tax burden and keep more of your gains by concentrating on tax-efficient investment choices. For 2025, think about keeping growth-oriented assets, like stocks, in tax-advantaged accounts, such 401ks or IRAs, where they grow tax-free or tax-deferred. You may be able to reduce your future tax liability by using these accounts to postpone paying taxes until you take money out. Since their income is subject to regular income tax rates, assets that generate income, such as bonds and real estate investment trusts (REITs), ought to be maintained in taxable accounts. Furthermore, because index funds and exchange-traded funds (ETFs) have low turnover. 6. Examine the estate planning records. Not only for the wealthy, estate planning is an essential component of tax-saving tactics. You can drastically lower inheritance taxes and guarantee that your assets are transferred in accordance with your preferences by creating trusts, making gifts while you are still alive, or creating other estate planning vehicles. Given that the estate tax exemption could alter in 2025, this is very crucial. You may fully benefit from the current, historically high exemption levels, which could be lowered in the future by reviewing your estate plan now. To lessen the amount of your inheritance and the corresponding tax burden, think about transferring assets to heirs while you are still living. In addition to protecting assets from estate taxes, irrevocable trusts can benefit your beneficiaries. Additionally, you can lower your taxable estate and support causes you care about by making philanthropic contributions through donor-advised funds or charitable trusts. By creating your estate plan while keeping an eye on possible tax law changes, you can reduce your own and your heirs' tax obligations and increase the amount of money that is left for future generations. 7. Remain up to date on changes to tax laws. Effective tax preparation requires remaining current with changes to the ever-changing tax rules. As 2025 draws near, keep in mind that changes to tax rates, credits, and deductions may have a big effect on your financial status. For example, tax brackets may change, or specific tax benefits may be changed or removed completely. By closely monitoring legislative developments, you may predict these shifts and modify your tax-saving tactics appropriately. Additionally, you may guarantee compliance and make well-informed decisions by collaborating with a tax advisor who is up to date on the most recent tax laws. Being proactive will maximize your financial gains and reduce your tax burden by giving you the freedom to modify your plans and maximize your tax savings in response to any new legislation. You can manage your taxes for 2025 and beyond with a strategic edge if you prepare ahead of time. In conclusion, your financial future can be greatly impacted by planning for 2025 with a carefully considered tax approach. You may reduce your tax obligation and maximize your savings by making the most of your retirement contributions, utilizing tax-efficient instruments like HSAs, and keeping up with changes in tax regulations. Being proactive will help you maximize your financial resources, whether you're using estate planning techniques, tax loss harvesting, or charitable giving. To make sure you're up to date on the most recent tax laws and ready to handle the tax environment in 2025, speak with a tax expert. Let us know in the comments what you think about the top tax-saving strategies to prepare for 2025 And don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.